Hey everybody, it's me, Greg Mannarino. How are you today? It is Monday, August 24th, 2015. All right, people, so what's going on? Pretty simple. We are witnessing historic events with regard to the U.S. stock market. As a matter of fact, just today, earlier at the market open, the Dow Jones Industrial Average fell almost 1,100 points. That, my friends, is the largest point drop in the Dow in history. So, what I'm here to tell you is simply this. What we are witnessing is not simply a normal corrective phase in this market. Clearly, what we witnessed today is historic, so none of this is normal. If you were to turn on the financial channels, you're going to hear some of the individuals there saying, "Oh, this is okay. This is a normal corrective phase." I'm sorry, this is not. This is historic. It should be no secret to anyone who has followed my work for these years now that what I have been saying is coming to realization beyond any shadow of any doubt. As a matter of fact, let me just say this. Back in May, I had said that this stock market had topped out, the bull market was over. I was the only analyst in the world to make that call. And I have to say it was pretty profound and it was spot on. And I guess that's a little bit of a claim to fame on my part. Again, no one else did that. Understand, when I made that call, I spoke specifically why I believed that we were at a market top. I talked about Dow theory. I outlined for all of you where this would likely be going. So, in the grand scheme of things, we are, beyond any doubt, standing at the precipice of what may be the financial event of our lifetimes. Forget about the 2008 event. I have said publicly that was just an opening act. What we are going to witness here is going to shake the core of the earth as this plays out. I have put that into a perspective for you many, many times here. Again, what we're witnessing is simply one thing and one thing only. The the markets trying to determine fair market value. We have seen, frankly, desperation by world central banks, none more so than the U.S. Federal Reserve, to keep the system propped up. They have fired everything that they can at the global economy to keep it propped up, inflating a bubble in debt, which is the greatest threat to humankind, bar none. And why? If you follow my work, you know why. It is not simply a financial issue. This is a resource problem. We have borrowed cash from the future in greater and greater amounts to sustain the now. When we are no longer able to do that, and we're getting there now, resources will become scarce, and we are going to have a global loss of human life, which is going to be biblical. There's no way out of it, people. This is a mathematical certainty, just like everything else that we are witnessing here. It's really a shame, honestly, because world central banks who have frankly distorted every single asset class to the point of no return. This never had to happen. This never had to happen. Simply this. The 2008 event, that was the market trying to correct itself at that particular time. I understand there was an issue with the credit markets freezing up and the Fed had to get in there and try to free up the credit markets. I understand that part. As a matter of fact, I've come out publicly stating, and I know I'm going to take heat for this, but I had said specifically that I was kind of for the initial steps that were taken by the Federal Reserve to free up the credit markets and get things moving again. But they went nuts here. The Federal Reserve went on to quantitative easing 2, Operation Twist, and all kinds of things. And they continue back to a quantitative easing now. So understand, the Federal Reserve is still printing cash out of thin air at a blinding pace. World central banks have gotten so desperate that they've gone negative. All they've created is a financial Frankenstein, people. And all of this is going to balance out to fair market value. So I can promise you that the selling pressure that we have seen in this market, since I called the market top, the Dow Jones Industrial Average has fallen almost 2,500 points, and we are not done. We are not done, and this is not normal, people. So my advice is this: be ready for anything. Seriously, there've been a lot of people out here who have been saying this is going to be a slow burn when this actually tips over. I've been saying we've been teetering on a knife's edge for quite a long time. It will not be a slow burn. As you can see how rapid this is occurring right now. Two things drive this market, people: fear and greed. Fear is stronger. And we're going to start to see that manifest itself again as we move forward. Now, I'm not saying the stock market is going to drop like a rock linearly, but we have clearly seen the top. We are in a global slowdown. World central banks are losing credibility, and this is going to rock these markets, especially with the threat of a Federal Reserve rate hike next month. Let me just say this: whether they raise or not won't make a difference at this particular time. If the Federal Reserve decides to push it off a little bit, that is going to be like a poison pill, in my opinion, to the stock markets and the global economy. They're going to say, hey, hold on a second. We've been hearing that we're in a recovery. Why isn't the Federal Reserve raising rates? That will have a detrimental effect on this market. If they decide to raise rates, quite obviously that will have a detrimental effect on these markets. I think if you're an investor or a trader here, you need to take cover. If you're invested in a 401k plan or something along those lines, some type of retirement plan, get on the horn with your investment or fund advisor. Talk to them about your concerns here. There are ways to protect your capital in the short run. They're going to try and tell you that you should just ride this out. Look, whether that's good or bad advice is your call here. I think we need to protect ourselves. We need to be betting against this debt bubble. This debt bubble. Let me go over that just real quick. We heard from none other than Federal Reserve former chairperson Alan Greenspan last week, who said the debt market was unstable and the debt was in a bubble. That's a big tell, people. I did a whole video about this. Please check my channel. Watch my last several videos here. I think they're key and they're very important. We also heard from a Federal Reserve Vice President, Stephen Williamson, talking about how QE has failed. All of this has failed. It's been a propping up mechanism that has done nothing but cause capital misallocations across the spectrum. It's very dangerous. So people, again, the premise of this video is pretty simple. We very well could be standing on the precipice right now of a global depression unlike anything we've ever seen in history. We always need to be prepared for a worst case scenario. And I can promise you, if you're going to leave your fate in the hands of our policymakers and the central banks, you got a big problem. You got to understand what you need to do, what you should have been doing for quite a long time, betting against the debt, becoming your own central bank, things I've been talking about for years. And if you have yet to do that, you better start doing it, and you better start doing it now. All right, with that said, I'm gonna end this video. Please share this. Let's get it out there. Let's people see what's actually going on. Because I can promise you, if you're gonna rely on the mainstream and the financial channels, again, you're in a lot of trouble. I'll see you soon.